Does it need to be as severe as it's been proposed? Could it have been phased? Could it have been delayed? Like a staggered introduction? I don't know. It feels very kind of all or nothing.
Are we at that knife edge where if they don't make this decision now, that we could just really see them collapse? Are we at that tipping point?
And they feel completely ignored. They just feel like the government only cares about the domestic mills and everything else is just kind of being sacrificed. We saw last year when the TRA made its changes to some of the quotas. Very last minute, Jonathan Reynolds overrode the TRA, brought it in very short time frame. That wasn't fair.
I'm just worried. I'm worried. I've been in this sector 20 years nearly now. It's a worry. The Metal Guys Talk Business podcast is brought to you by Compton Group, a specialist recruitment agency working in the metal, manufacturing and engineering sectors. Hey guys, it's Pete Comerford from the Metal Guys Talk Business. Mike's not with us today, but I'm joined by Carrie Bone. You're working currently at Kallanish Commodities. Currently, you're not leaving.
Not that I know of.
And you're an editor for the UK and Europe for the steel sector. Thanks for coming up to join us today. Obviously, the big thing is quotas. Everyone's talking about quotas. Obviously, I posted a few weeks back and you reached out and said, right, we should have a chat about this. So thanks for coming up. I think to start with, did you want to go maybe back a little bit and just maybe set the tone of why we are where we are, and then we'll go from there?
So these quotas are obviously coming in place July 1st, and they're replacing the current safeguards. At the same time, the EU is changing its quotas as well. They've got heavy reductions planned and they're increasing the out of tariff rate also. They announced theirs before us, actually, but they come into place at the same time. So you can see why the markets would be in step with each other. This is obviously in response to the changing kind of tariff landscape that we've seen from the US over the past, I guess, a year or so. As well as, there is global overcapacity and we do see record Chinese exports also. That still has to find a home somewhere. So a lot of countries and regions are kind of scrabbling to stop material flowing into their markets.
With regard to the overcapacity, because it's global overcapacity.
It's not us.
No. Yeah.
It's certainly not the UK.
Definitely not us. But I think with what I was listening to and reading about, it seems that there's been a number of these tariffs in Europe for a long time, which come to an end. And that's obviously why they're now looking at resetting up these tariffs. But there is a difference between what's happening in the UK and the rest of Europe. So can you just give us an idea? Because obviously we're looking at quotas here rather than tariff. So what is it?
They're quite similar,
Yeah.
no? These are all tariff rate quotas, TRQs.
Yeah.
So they've been quite similar systems. It's under WTO rules that safeguards can only be in place for so long. But now we see these quotas kind of being reset, and the government, these are going to expire no matter what. So something new needed to come into place. And before that, the months preceding that, there's been a lot of calls by various companies and associations about, we need these quotas in place. They need to reflect reality, because actually, if you look, for many of the products, the quotas themselves have been higher than demand. So it's not like first day of a quota quarter opens and they're completely exhausted like in Europe from some other countries. More often than not, for certain product groups, they're just not being utilised that much. And I think that's a reflection also of UK demand, which is pretty poor. It's nothing to write home about, but there's been, quite a few challenging years, other than, post-pandemic was kind of exceptional, I guess. But it's undeniable that the UK steel industry has been in decline for some time. And I think that's where we see kind of the erosion of how much domestic supply is meeting domestic demand. So we only meet 30% of domestic demand with UK produced material, 70% of imports meeting UK domestic demand, which is such a huge chunk. Whereas if you compare it to the EU or the US, they are meeting up to 60, even 70% of domestic demand with domestic material. So their portion of imports is as much as we're meeting with domestic. So we're kind of wrong way around. No other country is relying so heavily on imports as we are. And you think 30% is not a huge amount. It's a third a third of UK consumption is met domestically, it's not sustainable to keep losing more and more of that kind of ratio to imports.
It's obviously dropped significantly over the last few years as well. We're seeing like a downward trend in what's being produced in the UK. I mean, obvious to you because you've been in the sector for a number of years now, but what are the main reasons? You know, there's a number of them, but what are the kind of main reasons that the UK steel, is not being able to, win more orders? You know, what are the main issues?
I guess cost is always going to be an issue because, unfortunately, structurally, the UK just isn't a very competitive place to produce. The environment isn't really there. Our energy prices, at the best of times, are way above those of our nearest European neighbours, and they can be substantially higher. So, straight off the bat, you're already paying energy prices that are elevated beyond anyone in Europe, let alone if you look at those in, I guess China or other countries that have a lot of renewables or cheap gas like UAE. We don't have any of that. So we're starting off with really expensive energy. If you're a blast furnace producer, you're importing all of your raw materials in, the iron ore and all of that. So again, you're on the back foot again there. And then even, government procurement, the government is procuring at least a third of its steel from abroad, which is something that is being addressed in the steel strategy. But there is still more work to be done because if you look at projects such as Teesside Net Zero, so it only has government funding. It's not fully government funded. And because of that, a contractor was able to procure Chinese steel for it rather than being mandated for having to acquire domestic steel.
And
So
was that just purely cost?
I believe they wanted electric arc furnace steel. And this is also something we do see. The Welsh government seem to be excluding steel from, say, Port Talbot because it's not made in an electric arc furnace. So
Yeah.
they say, the emissions are too high and we can't procure it because they've set their own emissions targets. But the emissions targets don't reflect our current market setup. So then, even British Steel has spoken about this and said we're being excluded from supplying infrastructure with councils and governments because we don't have an electric arc furnace yet. British Steel have EAF planning permission already. Port Talbot is, currently transitioning, but none of them are there yet. And so they're actively losing orders when there's absolutely nothing they can do to gain them. So I think that's an unfortunate aspect of how the market is kind of against a lot of these companies.
I guess, when I've looked at what UK Steel have been saying, and obviously with the government as well, because I said this earlier on when I was chatting with Nick, it's like whatever the government do, they're going to get grief. Like whatever decision they make, they're going to get grief. So they have been bold to go right. We're gonna make this. We've supported, the mill, the British Steel mill that was effectively going to stop production last year. They've pumped a load of money into that. They're going to be invested in green steel, in Tata as well. So they're putting the money where their mouth is, or at least the taxpayers' money where their mouth is. But do you still think it's just too quick, or is the British steel output just so, and when I say British, it just means steel manufactured in the UK, are we at that knife edge where if they don't make this decision now, that we could just really see them collapse? Are we at that tipping point, do you think, where they've got to go in with a strong policy because we just can't continue to let the British steel manufacturing, like, decline?
Yeah, I think when you look at our current government, they have been quite proactive in wanting to address the challenges of the steel sector.
Yeah.
They have obviously, as part of the steel strategy, they created the steel councils, they had consultations. They went out and spoke to a lot of people in the market. And at the time, people were pleased they were being listening to. And this really seemed like a bit of a, last chance saloon to, protect what little industry is left. And I guess kind of right the wrongs
Yeah.
of the industry that essentially, I guess it's not too harsh to say that previous governments might have been a bit more hands off and these are private companies and let's let market forces play out, etc. um However, I think we live in a fundamentally different world now. I think in the last 18 months or so, we've got rising protectionism, we've got, massive geopolitical events. We're just not in the same situation anymore that we were even a couple of years ago. So I think, steel is getting a lot of headlines. It's as part of the steel strategy, it was made, I believe, a strategic sector as well. The government have said a lot about they want to try and procure more for, defense and infrastructure and be a bit more, I guess, self-sufficient. A lot of countries are seeking to protect their assets more, and our people who have been our allies in the past perhaps can't be relied on as much. And we see that with, the rising protectionism and tariffs, and lots of countries are putting in anti-dumping things, different tariffs to kind of respond to these changing trade flows. So it's just not as easy anymore to rely on the global stage. And I think we also saw that in COVID, that a lot of people were wanting to stay closer to home. I think when you saw global supply chains breaking down essentially overnight because of COVID, um, the kind of era of outsourcing proved that you can't rely on a country really, really far away. If you need, say, you need some iron ore, it's not going to come from down the road, is it? It's going to come from somewhere really quite far away. And when you have global supply chains that have fallen apart quite quickly, you're then scrabbling for material. So I do think that's kind of in the mind of the government is protecting their markets more, protecting what we have and protecting what's left and being more proactive. But I also think it's protecting the government's investment. The government obviously have been more involved because they've given Tata 500 million. So they want that investment to obviously get itself off the ground. And Tata have obviously said that they need these quotas to protect their investment. And Tata were losing a serious amount of money before they announced this £1.2 billion transition. And they obviously want to protect their investment. The government want to protect their investment there. The government instead have put a lot of money in British Steel. They obviously own Sheffield Forge Masters. They were looking after SSUK for a while when it went into insolvency. So really, the current government have got many fingers in many pies. It's a lot of money, a lot of taxpayers' money. So I think a lot of it is also how best do we protect our investments, because it's no longer a clear separation between, the private sector and public sector. It has become quite merged. And I don't think that's an uncommon thing. There are lots of governments around the world that have some kind of, they either fully own steelworks or they have a stake in the steelworks because they understand that, okay, if we need steel for defense, there's a war, we need our steel. How are we gonna ship it in? We're gonna have to be able to produce it here and protect ourselves a bit more.
How are you finding? Because you've been speaking, like I have been speaking to lots of people in the industry sector. It seems that quite a few people were almost a bit unaware, particularly in stainless, that they might be kind of pulled into this. It almost seemed like a steel thing, and then other areas are like, whoa,
Yeah.
what's going on? We weren't really aware of what was going to be happening. But what are the kind of conversations that you've been having, and what's kind of piqued your interest about maybe the, I don't want to sound too negative, but how aggressive we might say that some of the quotas have been.
Yeah. So we've all seen the provisional numbers, and I would say that a lot of the frustration is justified because currently they don't look workable. Some products, the numbers just don't really add up and they don't look workable. And I think one of the concerns is that the domestic mills would have to really ramp up capacity to be able to meet some of this demand if you can't get the imports in. Are they able to ramp up that capacity? How quickly? What are they currently producing versus what they can actually produce? Because I think there is a difference in what our domestic mills are able to versus what they are actually producing. So I do think that's going to take some time. And I think actually with these quotas, no matter what changes there are, it's gonna take, at least 6, 12, even 18 months of a market to kind of structurally change, and that's with the Middle East conflict going on in the background, which has given us, again, elevated energy costs. So it's a really unfortunate time, and then you always if you think of the steel mills, they need healthy customers. They need customers who are able to pay their bills, who are able to take on those projects. And we do obviously see a lot of pain from the construction and manufacturing sectors, and rightfully so. Their costs are rising, like a double whammy, really. They can't get the imports that they need, and they've got the Middle East conflict as well. So for them, it's not ideal. As well as, even like interest rates are no longer falling. They were, projected to decline, and that's one of the things the construction sector has been really relying on is those falling interest rates. And the construction sector growth itself hasn't been particularly strong for, again, a number of years. So it's quite hard because end user demand in the UK is pretty tepid. And if you even look at the automotive sector, I don't believe their production figures have returned to pre-COVID levels yet.
No.
So, and that's another sector that are also in pain and needing support. So the downstream, I wouldn't say is, able to really weather this storm without changes. So they've been quite vocal, I'd say. Obviously, you've got the CBM have been quite vocal, the BCSA as well. I've been speaking to some of the galv buyers as well, who obviously supply into construction. They're all pretty concerned, and rightfully so. I know that the CLC, which is the Construction Leadership Council, which is works with the DBT, they announced in April that they had a meeting with the government about the impact of this, and they're going to look at a solution before the quotas come in. But we don't know what those solutions are, and I think it's really hard to know. So we were obviously both at the NSA meeting in Leeds a few weeks ago, and there was a lot talking about just the complete uncertainty, the lack of clarity, the lack of being able to see what's coming further ahead. It's terrible for business confidence. It's just one of the worst things is uncertainty. How could you possibly plan your tons or your business for anything further ahead when you just don't know what the rules are going to be? But actually, I see the traders are reacting to this. They just don't expect to be able to trade within those allowances. They've all kind of pre-planned that they'll be paying that out of tariff rate. And because of that, they're changing how they're trading. So we do a UK HRC coverage, which has been on a DDP basis, but some people in the market are switching to a DAP basis so that they are not liable for duties because they fully expect there will be duties. They don't expect to be able to trade within the duty allowances. They're already saying we won't make it in. So therefore, we must account for these duties. And 50%, so that's pretty chunky. And, changing to a DAP basis will put that on the buyers to be paying that duty. Whether buyers are really aware of that or, 'cause HMRC doesn't tell you what you owe on day one,
Yeah.
you're going to get a letter in the post or some kind of electronic notification that tells you you owe quite a lot of money. And the traders and sellers, they're concerned because they've all got credit limits and they have to set aside 50% of their credit limit in case they've got a giant bill because of these tariffs. So they also see themselves trading less as well, which is again isn't really good for business. So I think traders are unhappy, construction and manufacturing are unhappy. So unless you're a domestic mill, there's quite a lot of, I guess, unhappiness in the market.
Yeah, I mean, the domestic mills that I've spoken to, and again, I'm not going to name who they are, but everyone I've spoken to has been, um, it's not that they're pleased about it, but obviously it's
I think
just,
it's a necessary step.
yeah, but it's like, it just is so advantageous for them. And I think there's loads of stuff that you mentioned there that I could kind of dive into, but I think ramping up production capabilities for some of these mills. I mean, some of them have been mothballed and offline for a period of time. They don't have the staff. They don't have the supply chain is not set up properly for them again. So to get those back online and then producing at the maximum capacities that it's just totally unrealistic. Like it just doesn't happen like that. Just to recruit the staff and actually get people that want to come back there who've then got the skill set, then to start winning the orders, get the raw materials in, start producing, get that material through and out to market with the difference in prices. I think people, again, are saying that they're struggling maybe to get quotations, which doesn't surprise me because I guess every man and their dog is speaking to. It's like, we were saying off air, it's like you go and get your weekly shop from Tesco, and they've got everything and they've got all the different ranges, all the different products, all the different whatever. But now you've just got to go to the corner shop, and it's not being disparaging of the UK manufacturers. I'm only using that as saying there's just less availability, and
But
there is.
also, why should you have to only go to one domestic mill?
Well, I think,
Where's the choice? And I think
yeah,
I often see people thinking the UK is like a mini EU when it's fundamentally not, because if you look at how the UK is structured, we have, a couple of domestic mills and they supply to a couple of product groups. In the EU, they've got a good number of domestic mills in different countries across the EU. So if you don't want to go to one, you've definitely got other choices to go to. You haven't just got one domestic mill making that product. And the plus side is that these domestic mills aren't really competing with each other in the UK. British Steel Rail isn't competing with Severn Steel,
no,
but it's not fair to say that the UK is a mini EU. However, the UK is exporting 80% of its steel to the EU. So it's very unfortunate that it's beyond unfortunate that the EU is planning their quota reductions also. quite a few people I've spoken to, they're really hopeful of a deal with the EU, that we can work closer. Actually, the King's Speech today did mention some kind of legislation about us working closer with the EU for trading opportunities. I don't know if that's still specific. And I think that's definitely one of the concerns, is 80% of our steel exports, that could be cut quite severely. Then we can't ramp up our exports to the US because they've obviously got a tariff on us, although ours is still somewhat
It's
reduced
lower,
than
but
others,
we're expensive.
but we're expensive. So, it's really tough. And then the government, wants to increase their percentage from 30% of domestic consumption up to 50%. But as you said, it takes time. That takes time. As I said earlier, you can't fix the steel industry overnight. And it's going to take a long time to get that percentage up. And I guess you have to start somewhere, but does it need to be as severe as it's been proposed? Could it have been phased? Could it have been delayed? Like a staggered introduction? I don't know. Does it have to? It feels very kind of, I don't know, all or nothing.
Yeah, I think that's the thing. I mean, what when I was listening to Gareth Stace and he was talking about, like, you've got to start somewhere, as you're kind of alluding to here. You've got to protect steel interests in the UK. If we want to have steel, we've got to make sure that these mills can actually produce, and they've got a market to sell into, which is here. I think it's interesting what you say about Europe, because the fact that we've kind of voted for Brexit a number of years ago, it's like their market is still quite depressed themselves. So if we're then putting in these quotas, which affects them being able to import into the UK, so it's detrimental to them. And then we're also saying, oh, well, we want to do a really good deal with you, even though we don't want to use as much
But
of your
the
material.
EU is much more self-sufficient, as we said. They're at
Correct.
60-70% of domestic consumption is met domestically. So they might not care as much exporting to. And actually, what I
Yeah.
see on HRC at the moment is that because of these planned quota changes, lots of the European mills have quite nice order books, and therefore there's not a huge amount of interest sending material to the UK because they don't need to. So then that kind of reduces supply again to the UK, whilst people aren't ordering overseas material to the UK from, Asia or elsewhere because they're worried about the tariffs. And I think that's also something that we saw last year when the TRA made its changes to some of the quotas. Very last minute, Jonathan Reynolds overrode the TRA, brought it in very short time frame. That wasn't fair.
Mm.
There was I just think that's you can't prepare for that, and it really damaged relations, I think, because then you get another TRA review and people say, "Okay, but can we even trust the recommendation?" There's, recommendation the other day, but if the recommendation doesn't count for anything, the minister can just override it and do whatever they want, then that's, again, that's uncertainty. So what are you gonna do there? And I think that comes back to the frustration a lot of people I've spoken to kind of across these sectors have said they engaged in this whole process of the steel strategy, the consultations, all of it in really good faith. They spent a lot of time in meetings, giving a lot of data of what kind of they needed, how their business works, and they feel completely ignored. They just feel like the government only cares about the domestic mills and everything else is just kind of being sacrificed. And even now, they're still in conversations with the government after the provisional numbers, and they just don't feel listened to because, they're not saying, oh, we need it to be, quota free. Everyone agrees there should be some quotas. And actually, to say about Gareth Stacey, he was saying, the UK does need imports. We are not self-sufficient. We do need some imports, and it should be, I guess, a happy medium. But I don't see a happy medium in the provisional numbers, and that's why so many people are just kind of upset and frustrated, and if people are worried about losing their businesses because they either have nothing to trade or they're not going to be able to get the material they need, or the cost will just be so high it'll put them out of business. So it does seem a bit like further downstream need a louder voice. And, the government have said, "Oh, we'll review it in," I think they said in a year's time, but how many businesses can you lose in a year until they suddenly turn around and say, "Oh, we've made a mistake"? Because once a business has closed or the production goes overseas, it's never coming back, and then again, as you said, with the mills, you're losing skills, you're losing skilled workers, you're losing domestic supply. So it really has to be, I guess, a balancing act, and it doesn't appear to be that at the moment.
Do you suffer from any of these problems? Are you asking around your office trying to find a new supplier or source materials? Have you got aged or high-priced stock that you'd like to liquidate anonymously? Or would you like new business from customers that are guaranteed to pay you for your materials? If the answer to any of the above is yes, then you'll be pleased to know that the Metal Guys Talk Business podcast is sponsored by SteelBuy. SteelBuy are a digital platform revolutionising the way businesses trade metal products online. SteelBuy offers risk-free trading where sellers are guaranteed to be paid, and automated processing including certification, logistics and invoicing. The network of vetted buyers and sellers is continually growing, and it's all housed in an easy-to-use trading platform accessible on any device. The online business-to-business marketplace for products is rapidly gathering pace, and SteelBuy are ideally positioned to capture the changing demands of steel buyers. So check out SteelBuy today and be part of the future of metal trading. Now let's jump back into the podcast. You mentioned Incoterms, the change from DDP deliveries to DAP. For those that aren't familiar with Incoterms, there's a stack of different types of Incoterms that you can procure material, with different terms. And based on those Incoterms, you have different levels of responsibility for material, leaving a mill, potentially going on a boat or a train or whatever, turn up at the port, what kind of fees that you have to pay, deliver to site, whatever. Have you been finding that, because you mentioned this, and when I was listening to your speech at the NSA event, have you been finding that people have not been quoting based on DAP terms? So all the big contracts that have been going through have all been quoted DDP, and therefore there's potential orders that are in the pipeline, and effectively, if people haven't given validity periods, there is that kind of
Risk, yeah.
yeah. And I think you just have to. It's almost like force majeure, isn't it? It's just like, well, it's just kind of tough shit. Like, I'm not going to honour that price anymore. But has it surprised you that, given what happened with Galv last year, because it was like about 12 months ago, was it, when that kind of kicked in? So has it surprised you that people weren't more aware and maybe weren't talking more with the downstream manufacturers that there could be this kind of risk? Or is it just, again, it's just so over the top that no one really thought it would be as bad as this?
I think to compare to the EU market,
Yeah.
again, everyone, I guess most people were aware they were expiring end of June. And therefore they've kind of been expecting it, but they were saying, people in the market in the EU were saying, no matter what it is, we just need to know what it is so we can start preparing. Like, we need as much notice as possible so we can go out and review, our stocks and our customers. And the UK did actually end up announcing theirs first, and they saw that as trying to give as much time as possible to allow, I guess, for these discussions to happen. But having also covered the EU market, CBAM coming in, CBAM is in itself a whole beast, and again, a severe lack of details. People absolutely desperate for details, still not really sure how it's going to work, lacking in clarity. So towards the end of last year, we definitely saw, buyers not wanting to procure material and not really, I guess, understanding that if they left it too late, it would arrive in Q1 and they'd be liable for CBAM. So that kind of thing, again, kills buying appetite. And it's a similar thing here. And obviously, by the time we get these quotas in place, et cetera, we've then got our own CBAM coming up in Q1. So we're not too far off. And again, you have that shift of demand of people not wanting to buy because they just don't really know what they're buying. And these are also provisional numbers. So again, they're not set in stone. They still need to be confirmed. So having the certainty to actually procure, I guess, large volumes, in the EU currently, we definitely see, because of Middle East conflict and, they've already got CBAM changing their trade flows, buyers are quite hand to mouth. They don't want to take on large stocks and have risk, and they don't want to risk buying from overseas. You just never know what's going to happen on the global market. I don't think anyone really expected the Iran war to either happen how it did happen or for it to continue as long as it's continued. If you look at, they've lost 1 billion barrels of oil now. Oil prices are going to remain elevated for some time now because, you've got a debt that needs making up. Even if the war ended now, it takes time to meet that debt and get yourself back onto where supply was. And again, I think the market has kind of structurally changed from that, and maybe people will be more kind of pushed to renewables. But it's those sharp shocks, freight has really increased. We see that in scrap as well. Transport for, trucks and stuff has increased as well. So it's kind of from all sides. There's so much going on. And if you're a buyer, and at the same time, demand isn't amazing. I think there's areas of green shoots in UK demand, but it's not strong. And when you get that, you then get reluctant customers, and maybe they're not really having those conversations with who they're buying from, and therefore maybe not as up to date with what's going on. So it comes back to that kind of relationship you have with your buyers and your suppliers, to be quite frank. And again, to bring it back to CBAM, people don't buy material need to know what those emissions are. They're having to go to their suppliers and asking for their emissions data and the information they need, and having those tough conversations of, if you can't give me that data, which I need,
I can't buy from you.
I can't buy from you. So I think it's part of those tough conversations. It's becoming harder and harder to trade ultimately, isn't it? I think
Yeah.
10, 20 years ago, you didn't have any of these large issues to be having to sort out your material stuck in somewhere halfway across the world, or not having any trucks and having to pay large tariffs, and then having to find what the carbon aspect is. It's so much of a bigger burden now.
Yeah, I think it's tough, really tough if you were in the I mean, I'm not in the industry anymore, but it does seem like I think because of the lack of clarity, I think it really does come down to that. I think if we move into, we don't have to touch too much on CBAM, but, John gave a really good speech the other day about it, and it was like, even the provisional figures that they're giving, or the certification figures that they're giving for different countries, it's kind of, again, it's making the steel prohibitively high priced again
Yeah.
until the actual figures come in. And there's going to be a huge demand globally for everyone to get audited as quickly as possible. So again, I can just see that there's going to be some huge winners and losers, and some mills that are going to win big, and some that are going to really fail because of just not being able to get their figures done as quickly as maybe other people.
But again, that reduces supply into the EU, and then EU mills become a lot more attractive, and then the UK has less to import from
Mm,
because those EU mills are quite full. So again, the UK is kind of in an awkward position because they've not got a huge amount of domestic supply.
mm.
There's a risk of bringing overseas material, and our closest neighbour is kind of closing in on itself a little bit.
The guys I've been speaking to in the industry seem to be most worried about the loophole, obviously, that you can just bring in finished products. Um, Nick, when he was on earlier on today, he was like, "Look, the biggest problem we see is just that it's a perfect storm for Europe, really. That they've got better production, or we're saying better, they have more production availability, but they also have a lot of the big fabrication end users, fabrication companies have got capacity. So it would be quite easy for them to pick up orders from UK businesses, buy the material overseas, fabricate the material overseas, and then ship that into the UK because obviously there's no tariff then on the product." Um, have you managed to speak, and again, you don't need to name names, but some of the really big, you know, users in the UK? Have you managed to speak to some of the guys top level within those businesses and really understand what they're thinking of doing? Because I'm guessing they're lobbying,
Yeah,
they're
yeah.
pushing back hard, but are we really going to see a decimation of some of those businesses, or could that be
You'd really hope that wouldn't
obviously
happen.
not? But yeah, what what
But it's
what
just
are you
to
hearing?
bring it back to CBAM again, that's
Yeah,
also, the finished steel loophole. Same as, bringing a car in from China,
yeah.
I believe is also wouldn't be liable for CBAM costs. But if you brought the steel in to make the car, you'd be liable for CBAM costs. So I know the EU are looking at expanding it downstream. So it's one of those ones where I don't know if you could bring in these quotas and have them covering fabrications at the same time. I don't know how well equipped the government are to handle all of this all at once.
Mm,
Like, I think when these quotas come in, there's going to be a huge backlog to work their way through. And I just can't see it being plain sailing for these
no,
quotas. I think I am quite concerned that I don't say there's going to be shortages, but I do think there will be some kind of delays, material stuck at ports, or even material being held at ports because it's not met that quota. And so people will bond it and wait instead for the quota to reopen next quarter, perhaps.
mm,
Then you've also got the UK government trying to manage all of these quotas and the out of quota tariff level as well. It's just a lot. So I think it's obviously is a really big concern about could someone just drill a few holes in it and send it in? I think it's one of the things that the government will probably likely monitor at first, those imports, and then decide what to do and hopefully be, I guess, reactive to, okay, we no longer have imports of this product coming in, but we've noticed a huge amount of imports of this product coming in, and then be quite reactive in that sense. And I don't think being reactive is necessarily a good thing,
Yeah.
because by that point the damage is done. But how feasible is it really? That I don't know. How many are there companies that are lined up to sell into the UK market and take advantage of a loophole? And how long do loopholes exist for? As soon as they're kind of identified, work should be done to close them. But I guess it also comes back to someone's buying that material. Someone's choosing to buy that fabricated material, knowing it's going through a loophole. So would you say buyers have a responsibility to not damage their domestic market? It's kind of the same as the Chinese exports are at record highs, massive overcapacity. Someone's buying that steel. Maybe it's because it's cheaper, but is it better to go for the cheaper option and erode the domestic market share? Or is it better to buy British, but potentially pay more? So obviously there is a campaign for, buy British steel and support the domestic market, but does it always come down to cost, or should people have a little bit more social responsibility? Like, I think that's an important conversation to have as well.
I think it's a problem. I mean, I look at back if I take my other hat on, and when I was working in the sector. So I used to buy commodities from China, stockhold them, redistribute them all over Europe, everywhere really. Um, it was always price. It was just always
But, like,
price.
I don't buy from Temu, for example,
Mm.
because morally I don't agree with it. I try not
Yeah.
to use Amazon, for example. Like, I make that choice.
Yeah.
This is much just my personal life.
Mm.
It's probably like shoes and handbags. It's not thousands of tons of steel.
Mm.
But when you have campaigns like buy British steel, you're hoping to convince people, or even by signing, I can't think what it's called. Is it the Steel Charter?
Mm.
You're saying you're committing to buying British steel,
Yeah.
domestically produced steel, even if it's more expensive
Yeah.
than import. So, do we need to be more conscious of the impact buying Chinese steel has? Because when you look at, just take British steel or any kind of steel works in the UK, the people they employ in the areas, they're the largest employer in the area, they pay good wages for skilled people.
Mm.
And if you've been buying tons and tons of, I say cheap,
Mm. Cheaper.
I think not necessarily cheap, but maybe subsidized,
Mm.
because I think if you look at some countries, some governments that own steelworks, they can be subsidized endlessly, and you can't be competitive against something that's been government subsidized. So, yeah, that's kind of what is your choice there in material you're going to buy, but that is definitely something that comes up quite a lot, is you can't compete with subsidized material. And I've gone quite far from a question you'd asked about
Yeah. Yeah.
fabrication, but it's quite a big answer, because again, and if you put tariffs on fabrication material, is there someone else who's impacted by that? Is there someone further downstream? Like, where does it end?
Yeah.
And then if we put tariffs on something, another country might be like, well, we'll put tariffs on you back then. And then it becomes another conversation to be had of, how Trump's tariffs were quite, you're doing this, so we're doing this. If you do this, we'll do this. So it's all like a give and take. So I think that has to be considered of, where is this material coming from, and would they put tariffs on a different product of ours in response? Because we don't operate as an island.
No. No. I just think it's a real problem that that issue though is already being spoken about. Some of the people I've spoken to have said, we supply steel, for instance, a certain type of steel to X client, and I again won't name the client. And immediately, if they look at what the new pricing levels would be for those materials, it's become prohibitively high. And because some of these companies have got global manufacturing, it's very easy for them to go, well, if the UK is prohibitively expensive to make that thing, we'll just make it overseas,
Yeah.
because we can effectively unbolt our machinery and we can float it off somewhere else. And actually, we can take the people with us, because some of our really skilled people, we can pay them to move them or retrain people. And I
But that's
think,
similar to what I guess the US is trying to do. They're trying to reshore manufacturing.
yeah,
But I'm not sure how much actually, are there new factories being built? manufacturers returning to the US. I think it's always quite a big ask because, as you know, politics, people come and go quite quickly.
Mm.
And if you're building a plant, you want guarantees that you're going to be able to see it through to the end. And we've kind of seen, to kind of touch on like renewables, a lot of renewable projects in the US have been cancelled since Trump has come back in. So, they've invested a lot of time and money, and now the project can't go any further. So it's a big risk if you're just say, okay, we'll produce this here, but will you be in office when we're done with our
Yeah,
timeframe?
to kind of see it through.
And it's kind of like if you're looking now, obviously, Keir Starmer's been in the news over the past week or so. If he was replaced by someone from his party, would they still want to nationalise British Steel? Would they still want to implement the steel strategy? And then if it went beyond that and there was an election, that would be terrible for business because anything political or elections, they put everything on hold because everyone wants to wait and see what's gonna happen. And I don't know if the steel industry has that amount of time to wait for there to be, a leadership contest or there to be a general election and then someone new come in and we've seen from what some of the parties such as Reform are saying or what the Conservatives are saying, what they want to do, they don't want to have a net zero target and they don't want to expand renewables. But these mills, they're counting on green steel supply to for a market that's gonna be net zero. So then, now obviously some politicians have said they want to restart coal mining in parts of the country, which is just again, it's kind of moving away from where the market is transitioning to. Tata Steel can't bring their new EAF online if the market environment actually prefers coal-based steel
Yeah.
making. So I just think it's really hard to have that clarity to invest. And I think the UK has been quite choppy in recent years, and it hasn't been a particularly attractive place to invest in. And that's kind of where we see the decline in the steel industry is there's been massive underinvestment. Look at how old some of the assets are. Like the British Steel blast furnaces are ancient, to put it lightly. They're coming towards the end of their life, and a decision needs to be made about what's going to happen there. It's from the current government, it's certainly not a new blast furnace, is it? But if there was some kind of general election, you know, if they view electric arc furnaces in the same way as net zero, and they'd prefer, there's this argument about the UK would be without virgin steel capabilities. They might say, okay, a new blast furnace, and that wasn't part of the plan, and that would be a whole different conversation to be having. So all of these unknowns, they create a lot of uncertainty, and then that creates business uncertainty, and then things just screech to a halt, and you can't have robust demand or anything kind of positive from an environment that doesn't allow that.
This episode is brought to you by Nero Pipeline Connections, the go-to supplier for stainless steel tube, fittings, valves and pipeline products across the UK. Whether you're in process, manufacturing or engineering, Nero makes sourcing simple. They've got over 12,000 products in stock, from BSP, fittings to flanges, valves and fasteners, and all are available for next day delivery. With ISO 9001 accreditation and an experienced team, they're built for businesses that can't afford downtime. So check out nero.co.uk to explore their full range. And now, back to the pod. I think I always try and look at longer term. There's intelligent people putting these strategies together. Far more intelligent than me.
I don't know if you would agree with you though. I think a
Yeah,
lot of
I
people
mean,
in the steel sector, they feel like the government don't understand the steel sector.
mm,
And there was someone who said, past governments, if they closed all the mills, they could just import all the steel in. They didn't really understand the importance of having domestic supply.
well, I think that's where I was going to jump back in with the blast furnaces. We voted for Brexit, the country, sorry, voted for Brexit, should I say. I also did not, but yes. So that part of that was that we could regain control of what we're doing as a nation. That was kind of how it was pitched to us, and get our passports to change colour or some rubbish like that. But anyway, um, with virgin steel production, there's people producing steel all over the world. We've got global overcapacity for steel. So it wouldn't be very difficult for the UK to go, well, actually, if we didn't need those assets, and we could turn those off, we can quite easily do deals with certain countries and make sure that we still have the capability to buy those products. The fact it's costing us such a huge amount to keep those plants running, it means we've got a lot of cash in the bank to
I
be
think
buying those
no, I
materials.
think that cash would find itself being used elsewhere.
Of course, but
If you think about the Steel strategy,
yeah,
they say they've got up to 2.5 billion from the National Wealth Fund to invest in the steel sector. But as we've seen, British Steel is, ploughing its way through taxpayers' money on a daily basis. It's over £1 million a day of taxpayers' money that is losing. Um, and I think there are concerns that up to £2.5 billion might just become the British Steel Fund
right.
and not have and not become what the steel strategy hopes it would be. They've done forecasts for what we would need to have a plate mill that would be able to produce plates for offshore wind. So, offshore wind is a massive opportunity
Huge.
for us. Hopefully we haven't missed the boat on it, but we'd need a new mill that produces the sizes that it needs. So even though we've obviously got Metinvest and Motherwell, they just don't produce the sizes that we need. So the steel strategy part of it, I have read every single page of a steel strategy, and they went through and they plotted out what would be the best option for this mill. Is it, starting from scratch and it's an integrated mill? Is it, they get billets or slabs from a different mill? So they see, plate demand really set to increase for offshore wind, and therefore it's well over £1 billion for any kind of steel mill. So that would be one maybe, but it's coming close to £500 million that British Steel has used since it got taken over last April. That's as of April is around 400 million. So sorry, as of March, so actually a couple months behind. They're losing a lot of money. They're eating a lot of money, and the government, they've said this week that they want to introduce legislation to allow them to take control of British Steel. And I also think that's a whole separate conversation of should the government be allowed to take assets off of companies? Is that morally right? Does that make us unattractive to global investors, knowing that they could actually just have their assets taken away from them if
I mean,
for
it's
whatever
it's
reason?
rare.
It is rare, isn't
It's
it?
pretty
But
rare.
it's actually part of the government did a report on kind of the value of stepping in to support British Steel, and that was one of them, reputational risk of
Right.
do people want to invest in a country where the government can just take your mill away from you? And I agree, it is rare, and the government at the time said, they'd negotiated in good faith with the owners of British Steel. They offered to buy raw materials, and obviously none of those offers were taken up. So I think they had little choice. But again, they've also been criticised for having no exit plan. They'd stepped in to take control of a mill, and they don't have an exit plan. So the talks with Jinyi have failed about, what's a reasonable price for the company, to compensate them for the mill. They haven't been able to
Is there a
come
big disparity in what
only what the media
we wanna
report,
pay
only
and
kind of yeah. So I mean, before they even stepped in, they'd offered them 500 million, same as Tata for the transformation, and media reports that they wanted 1 billion, which is
right.
a lot. And again, the media reports that Jinyi want a lot of money for British Steel, and I think that's unfortunate because even if the government did give a lot of taxpayers' money to Jinyi, they're still left with a steel mill that's losing £1 million a day, and then they need to find at least another £1 billion to transition to electric arc furnace.
Yeah.
So they've kind of got a
While it's burning
horrible
money.
lose-lose situation in which they've got a steel plant and owners they need to pay off, which is now might not be happening with this legislation allow them to nationalise it. They're reluctant nationalisers, I should add. They don't really want to be owning the plant. They've been very consistent, as I said earlier, about wanting a private investor or a private co-investor. They said they're willing to support, but they don't actually want to own it. And I think it's quite a can of worms, really, because are they also going to go down the same route as Tata Steel and close the heavy end and see a large amount of job losses, and then do the same, just become a re-roller until they set up electric arc furnace, which is absolutely not what the unions want. Obviously, they want to try and transition to have maybe build an electric arc furnace and turn off one blast furnace. That's also really logistically challenging on a site and adds more complication and probably more cost. So it comes back to who is paying for it. Are we paying for it? Is a private investor paying for it? So with the steel strategy, where will the money end up? And I think the steel strategy is one of those things where it's a very good idea on paper, but can it be implemented? Is it realistic? And this is something I've also seen. I've been covering the UK market obviously for 18 months now as at Kallanish. And then the government has said all kinds of things. They've got quite a few submarines that they need to recycle, that have been needing to be recycled for like 30 years.
Right.
They want to melt down the submarine metal here and then produce the steel for the submarines here as well.
Okay.
With what capabilities? Like what plate plant do we have that's capable for that? How would we be able to handle that material? Like, it's just nonsensical. They have these I guess they're well-meaning ideas, but when you kind of look at the reality of it, it's like, how is that really gonna happen? Is that really gonna happen? So I think with the steel strategy, it's all a good idea, but will it actually be implemented? Because they say, this is gonna protect the steel industry and put it on stable footing. Is it? Or is it just gonna be a big fat nothing? Just because there is a strategy doesn't mean it's gonna be successful, and if it's not successful, then there's no plan B. So I think it's the same with quotas, which are kind of, alongside the steel strategy, very well intentioned, but the reality has kind of come home now that it's extremely challenging to try and reset a market that is structurally dependent on imports.
The Metal Guys Talk Business podcast is brought to you by Compton Group, a recruitment agency operating in the metal, manufacturing and engineering sectors. With a large, engaged network of candidates and clients, we help businesses make great hires in sales, operational, technical, quality and managerial roles, as well as assisting people in their careers by matching their unique skills and aspirations to businesses that are hiring. Having worked with more than 200 niche businesses since 2019, Compton Group have become the go-to recruitment partner for many of our industry's leading names. So talk to us about your next career move or let us work with you on your business's next hire. Compton Group. Recruitment engineered for metal and manufacturing. Let's go back to the quotas because that's really the most relevant thing at the moment. There seems to be, as we said right at the start, some of the quotas seem a bit nonsensical, really, given what the demand is and what we think can be turned back on. And as we've talked about in this podcast, it just seems very unlikely that the UK mills, particularly the ones that aren't really producing at the moment, can be turned on quick enough. I mean, as of today, we've got, 13th of May, we're recording this, and we're looking at July the 1st. So it's like, 7 weeks away, which is like, it's daft, really. In terms of, there's a couple of things I wanted to ask you. Firstly, you've been talking about this a lot. You've been thinking about this a lot. So how would you have tried to maybe structure, or what do you think would have been a better structure to phase this in? And secondly, do you think, because these are provisional, and we keep having to say it's provisional, not definitive, which of the codes, because I think we were looking at maybe, was it, it's not codes, is it 1 and 17?
Yeah, okay, categories.
Yeah, so which of the categories are we looking at that you think there might be a slide back on those numbers? Which are the most likely ones that you think there might be some change on, if you know off the top of your
Yeah,
head?
so I think the main product groups I think people are concerned about is merchant bar. And I think when the government announced this policy, they said it would be, an overall reduction of 60%. But things like merchant bar have been reduced by 90%, which feels very severe. And I find that hard to believe that that's necessary. But also, I looked at the numbers earlier, and I can't even think what category it was on. One of them, Japan has 74 tons for the whole year.
Yeah.
I just think that's crazy. Where has that come from? And we don't know where these have come from. Have these been, generated from past shipments, or are they just, plucked out of thin air? They do seem quite nonsensical. HRC is another one that has had a very, very drastic reduction. And I don't even know if the domestic mill could meet up that. It's not like the mills are ramping up capacity expecting the demand to be there, because that's not how a mill works. They have to wait for the orders to come in, but it's going to take time. It's going to take time. And do we see a slowdown until the mills have ramped up that capacity? Or do we just see the quotas being absolutely blown apart on day one, and then everyone paying higher prices? So it kind of depends, how long is the government willing to sit back and watch this play out before they step in? Because I do kind of wonder, you know, will the government blink? Can they afford to blink? Or they're going to say, no, this is our policy. we'll review it in a year's time. Like, how firm are they going to be with their intentions of this? Because sometimes, backtracking is weakness.
Yeah, of course, of course.
But then I just don't know. And they did say they're provisional and subject to change. And I do hope, there's been conversations about GAL, HRC and merchant bars definitely come up quite a lot. And we've seen, UK HRC prices have really risen since the safeguarding since the quotas were announced. We've seen a real rise in prices. It just doesn't seem to be, prices aren't going to fall because that's kind of a replacement
Well, it's
cost
yeah,
now.
that's just where it is, and I think that's the thing. It's like prices can go up. We saw it in COVID, particularly, didn't we? Prices just ramped up massively, and there was huge demand for a period of time, and then they kind of dip back down. Stockholders who've got stock make a lot of money. Great for them for that period of time before they drop off again.
They're in exactly the same position, those stockholders. They've got the
Correct.
stock. They're going to sell it at these elevated prices over the next, what,
Oh
6
yeah,
months or so?
yeah. I mean, I spoke to one of the largest stockholders a couple of weeks ago. I was out with a chap from there, and he was like, "Yeah, we're just making a fortune." But the prices can only live at that level for a certain period of time. You can't. There's certain products that they can't be at that level. It's just prohibitively expensive, and I think that's where those engineering companies that look into manufacture, if that's going to be the new norm,
Yeah, the new
they can't
norm.
afford the
Let's go.
new
Well,
norm.
again, to bring it back to CBAM, in the EU, the market is on a higher footing, I think, on a permanent basis because it has to consider those CBAM costs. So a lot of people say to me, steel will never be cheaper than it is now
Yeah.
because there's just so many things, the quotas, CBAM, the Middle East, none of these are kind of going away. And therefore, other than changes in demand, there's not really much room for anything to decrease because if you look at mills in Europe and UK, their production costs have really increased. These energy costs, they translate into every aspect of our lives, really, as I said before, the freight, the transport, scrap is rising, and then, people who are buying the scrap have to pay the higher prices, and then they need to put up their product prices. So things remain elevated and it has to kind of trickle down. But we do see pushback from for end users who just can't absorb any more costs. And I think that's totally justifiable. But at the same time, mills, they've also got their own production costs and margins to protect as well. So I just don't see a collapse in price versus, obviously, COVID prices were, I guess, once in a lifetime and had to come back down again. But I don't see prices substantially falling for any period of time unless there's, another black swan event, and God forbid, whatever that will be. But prices, I think, will remain elevated for a prolonged period of time because of these, variety of reasons.
I think for companies, just to finish off, there's definitely an issue where companies feel that even if they're within a trade association, it's like, how do we get heard?
I think the trade associations are doing really good work.
Yeah, I agree. I
There's a lot
agree.
of
And I think
lobbying and they're serving their members really, really well.
well, Tom said, didn't he? Tom at Dougal, he made the point. He was like, we've definitely been heard. You said it yourself in this podcast. We were definitely heard. We couldn't have been clearer. We've given all the information. So now that we are where we are, there's a lot of companies who they're almost hearing about this for the first time a month ago, and they're almost like, well, we weren't even aware this was going to be happening. And they're almost going, right, how do we lobby? How do we make a case? How do we put that forward? Is it purely through trade associations, or what are the kind of routes that you think you can, if you're an SME business, how can you get your particular pain point heard by government? How do you put it into the mix?
Yeah, it's a good question. I think trade associations, as we said, serve their members incredibly well. And I think it's not just for lobbying. I think the connections that you make there as well are quite helpful. And, as we obviously both said, we were both up in Leeds. And I think hearing others in the market perhaps struggling with the same things, I think that's also a big aspect of knowing that it's not just you. So I do think trade associations are very important. I think it's also regional trade associations. They don't have to be the big, the ISTAs, the NSAs. There are smaller groups. And I think finding fellow people, and even on LinkedIn, I see a lot of posts on LinkedIn. So ever since the safeguards have come out, I think being part of something such as a social media network and finding your people helps bring up a voice because people find each other and agree to act cohesively. So I think that's really important. And I would say I think there are some aspects of the market who perhaps haven't been heard and haven't lobbied as loud. I think we all know who have lobbied the loudest in the run up to this,
Mm.
and they've made a big deal out of it. And I see it in the EU as well. It is kind of a he who shouts loudest. So I think finding, I guess, your voice and finding people to represent you is really important. It's essentially, your livelihood kind of depends on you being able to say, this isn't going to work for me. This needs to be amended. So I think, as I said, construction and manufacturing have been very vocal, and I think they are, I don't say lucky, it's not luck because people work very hard to represent the interests of their members. But I do worry there are some aspects of the market that are perhaps much smaller and left behind. And you can only hope that they see, reporting like what we do or events or even posts on LinkedIn, and they find a way to get their voice heard, and they speak to, they find a minister or even their MP, and or even put a post on, as I said, on LinkedIn or come on your podcast
Yeah.
to get the news out there, because I don't think the government have the visibility across the whole market unless it's put in front of them. And that's just how governments work, isn't it? They can't be everywhere all the time across everyone. So it's very much you need to put yourself forward and speak up to be heard.
I'm just worried. Like, I'm worried. I've been in this sector 20 years nearly now. Um, and it's a worry. I look at it and I think, I understand why the government are doing what they're doing. I get it. But it does seem just really fast. And
I
not
think
that it's
that's
not that
reflective
it's
of the
ill
whole
thought
world
out.
that we live in.
Yeah, I don't think it's ill thought out. There's you can understand the why behind it, but it's the speed, and I think that kind of taking a bold stance and just, this is what we're going to do, bang, it's done. It just seems far too quick. I think a phased, in my opinion, I think if there was a phased introduction of this and they went, right, we want to move back from say 30% um, to that 50, maybe 50, 60%, if we're being really bold, that's where we kind of want to get to. Yeah, it massively hurts members from ISTA, the traders.
Yeah,
It's
yeah,
it's
yeah.
t- it's t- it's
I don't
tough.
think the government cares about
No,
traders.
they don't. They don't. Yeah, well, maybe
I
they
don't think
do.
that's
Maybe.
very high on their list, to be honest.
Yeah,
I think
yeah.
that's
So
unfortunately, I think they are the martyrs of this policy.
yeah,
But traders, they're traders and that's what they do. They adapt and they find something else to trade. Maybe they just won't trade in the UK anymore. Maybe they'll trade a different product. And I think if you're a big global trader, then that's probably what will happen. If you're a smaller trader, I'd imagine there would be some players exiting the market in the
yeah.
next 12 months, which is sad in itself that people could lose their jobs. But, traders have always adapted to, tariffs and trade flows and wars. It's kind of what they do best is, providing credit for mills that haven't got enough credit for everyone and moving material around logistically. So I say it's an opportunity for traders to, put their best foot forward and make
An
themselves.
opportunity for traders. You
It
heard it
is
here first. But I agree. I agree. You've got to roll with the punches, haven't you? These kind of things happen.
upheaval and chaos is where traders make their money
Yeah.
fundamentally.
Yeah, yeah. I think though, going back to kind of what I wanted to say, and I was going to pick your brain on this as well as we finish, is if we were looking at maybe what might have been a better roadmap for this. I think if we were looking at 30% and we're going, right, how do we move that to say 50, 60% or 50%? It doesn't have to be done in 3 weeks, 6 weeks. It can be done over 2 to 3 years potentially. And I think some of these plants, particularly the ones that are effectively mothballed at the moment, I think it will really take them a long period of time to get up to speed. I think there'll be a lot of problems, hiccups along the way, as there always is when you're trying to take that capacity back. There's going to be a lot of shifts as well in how people are doing business. I just think it could have been done in a more phased, structured way. And I think that would have allowed the market to react, to make sounder business decisions. It feels like people are really rushing now. They're trying to get materials in, as we
Or have
heard.
the government gone high knowing they'll have to concede X amount?
I,
Bit
d-
like
I
when
just
you're
don't.
buying a house or a used car, you're never gonna pay, the price that's printed. You're always gonna try and negotiate down.
Yeah,
So maybe, they're saying they want 50%. Are they realistically
but they
thinking,
don't. But
"We'll
they
get
don't have
40?"
to negotiate down, do they? That's the thing, because they hold all the cards. They can make the decision.
They're always gonna have people in their ear. There's always 2 sides, many more than 2
Mm,
sides, but they're always gonna have, the mills, as I said earlier, wanting to protect their investments and saying, "Oh, we could pull our investment out if you're not gonna do this." And then you've got the other side, of saying our construction sector is totally done for with this. So I think the government are gonna have to we can only hope that these numbers, once they're confirmed, make more sense and are more workable. I think there has to be some wiggle room here, and there's gonna have to be, I think, concessions on both sides, I think, and I think that's the best we can hope for, is that the published numbers are more workable.
when do you think we'll see those published numbers? Will it literally be at that date that it'll
Yeah,
be
I
like
actually
the?
have no
Because
idea.
that's the thing for me. I'm like, do we kind of, in a week or two, it might be between now and it
These
releasing this
discussions are
podcast.
still ongoing. I know
Yeah.
people are still meeting with the DBT. That's actually something in all my coverage of this. A lot of people haven't wanted to go on the record because they're still having those conversations and they don't really want to put their face and name criticizing the government on paper at a time when they're having those discussions. So I think that's something that's played into it as well. There are a lot of discussions that are still ongoing. The fight is still going on. So we can only wait and see, and when they're published, we'll have to pick through them
Yeah.
and see if they're workable. I imagine I do wonder, is there ever a level at which the industry says, "Yeah, this is fine?" But if you look at the current quotas and the actual demand, they have been too high for too long. So we can only see, and I'm sure we will hear about it if it's not workable. But it's just I think it's a risk the government are gonna feel they have to take. How much of the industry can they afford to risk losing to make this work?
Thank you for sticking around till the end of the podcast. To help this channel grow, if you could like it, share it with any of your colleagues or people who are in the metals or engineering or manufacturing sectors, that would be great. Also, you might feel like you're the perfect guest for our podcast to tell your story of your career, or maybe there's someone in your network who you think would be great for us to interview. If you want to get in contact with myself or Peter Comerford, that would be great. We'd also like to take this opportunity to thank our sponsors, Steelby, as well as Nero Pipeline. Thanks for watching.